Hello, my good friends. Thank you for tuning back in. This video, I will only look at gold and the dollar and the relation between the two. First off, I love gold. I think gold is about to do amazing things here in this decade. I think we are in for a big move up that will surprise many, just like they did in the 70s and also in after the dot-com bubble. But I think gold right now is a major player. It has a major role in the financial system. As you know, more or less every central bank is buying gold head over fist, or whatever you want to call it. They're buying everything that they can buy because they know that this 40, 50 year monetary system is coming to an end, and they're about to introduce their new system. And the way I see it is that gold has some sort of role in this. Otherwise, they wouldn't be buying, right? I don't know why they're buying, but I do know that if they are buying, I have to have some gold as well. So gold, for you gold bugs out there, I think the time has come for gold, not tomorrow, but as mentioned, over this decade. And I hear many people saying that the dollar and gold is very highly correlated, which I say that's bullshit, to say the least. Because if you look at this is the dollar, the DXY index going back, what is it, 50 years? And as you can see, this is where we went off the gold standard. That were at that point the dollar was 120, and now we are at 100. Yeah. So basically, we have only gone sideways for like, excuse me, I have hidden something here. We've only gone sideways for 50 years in the dollar index because it's measured against other currencies. So it's all fake and baloney. So what I want to do, and to give my view on which ratio the gold is correlated to. And for that, we are going to look at the Dixie divided by inflation. And that's when things to me gets really, really interesting because this is zooming out. This is the loss of purchasing power for the amazing dollar over the last 50 years. As you can see here, it has lost. I think it is actually more, but this scale shows 90%. I think it's more like 98 or 99%. But anyways, it has lost a tremendous amount of purchasing power over 50 years. So why do I like this chart so much? The Dixie divided by inflation, the CPI. The reason is, to me, and let me show you why. As you can see, I'm just quickly going to show you there are basically only three technical setups that I'm looking at right now. This is the end right here. As you can see, the 80s. This was the end of the first bull market, of the 90s bull market. Let's call it BM, bull market, yeah? So we came down here and then we went into a bearish wedge in this ratio, but that meant that the dollar was outpacing or it gained more compared to inflation, and that's very bad for gold. Okay, and then again, we just had a drop here, but gold didn't do much. What we then saw coming into the dot-com bubble was this formation coming right here. And when we finally started to crash down, this is back in 2002, gold went from, correct me if I am wrong, but from 200 to like 2000, more or less 2000. So it did a 10x on this move down here. 10x, right? Gold did a 10x here, and here it did like, I can't remember, 15 or so. So what is coming up next is actually a major. These are small wedges, right? And this is a big one. It's more of, you can see here, coming across here and coming across here. This is what the dollar has done against inflation for the past 15 years. This is the bottom, right? No, this is the bottom, sorry, in the gold bull market. We had the '08 crash where the dollar spiked and then it came back again to the double bottom, and that was the end for that bull market where dollar hit roughly 2000. And ever since, we've just been in this long range. And as you know, the dollar can never, over a longer period of time, it can never ever outcompete inflation. Why? Because if it does, the entire system will collapse. So what I see is that once we break, let me do a better line here because that's rubbish. Let me just find it a bit better here, like that. Then we have the inner here. But anyways, once we start to break this low here at 0.325, this is where gold and silver, for that matters, and platinum, but anyways, let's stick to gold, will start to do amazing things, and for many years after to come after that. And why? Let me show you. Let me show you. Let's just remove these. All right, we can have we can remove these, and then what I want to show you is let's overlay gold here. XAU USD. We take the, where are you? Where are you, my good friend? I need the longer time frame one. There it is. Okay, this is the gold chart. Yeah. Let me put the the vertical lines here. As you can see, here we have the end of the 80s gold bull market. And as you can see, once we pop down here, boop, we have the end of the 08 or the 2011 bull market. So yeah, that's how it is looking. And then what I'm seeing right now, and the reason why I'm saying that this ratio is what tracks gold or vice versa, is if you flip this one, invert the scale. Let's do it the other way around. Sorry. If we flip the Dixie divided by inflation, we flip it like this. And then what you can see is the high correlation of these two bad boys right here. I just put both on log scale, sorry. But as you can see, these two are now more or less perfectly, well, not perfectly, but you can clearly see the correlation between when if the dollar loses value against inflation, gold will go up. It is as simple as that. And therefore, let's zoom in here and do like this. It might be more easy now, it's fine. As you can see, this is gold coming up, and then we have the dollar going sideways. Right here, yes. So basically going sideways for 15 years, and gold has done the same, right? Therefore, if and when, it's not an if, it's a when, this ratio gets above, remember it's flipped right now, so this means that when this goes up, the dollar loses the race against inflation. When this happens, gold will do the exact same thing, more or less. So that is why I say that this ratio is the one to look at, and that gold is not correlated to the dollar itself, but it is heavily correlated against dollar divided by inflation. As you can clearly see here on this long-term chart, right? They match very well. Yes, you have the peaks; they go up faster sometimes, and then it goes below. But if you were to do an average on this, I mean, it's more or less perfectly in line with the average, I would say, if I had to do it. So yeah, gold, once this breaks, we will go on a major move up for gold. And how far are we away from this major breakout? We can do a measured move here. We can do a measuring. So the dollar has to lose, let's call it 4%, maybe a bit more because that would just be a peak out. But anyways, 4% in this ratio, 4 or 5% in this ratio, where the dollar loses against inflation. That's when we have the big go. That's when we break the all-time high for gold, and that's when we are going to have a major move up in gold. And how can we go for gold? Let's have a look. There are different ways to measure it, but I will do the way that I have done. Get rid of you, do the uninversion there again. Okay. So this, I'm looking at the 70s bull market compared to now. And for this measured move, as mentioned, as I said, you can do it differently, but I like to do the Fibonacci extension. So to me, let's do the Fibonacci extension. We take the bottom, which is around here, going up like this. Right, so let's look at the 70s. You could also do it on a log scale, but yeah, I think let's do it on a log scale. Let's do it log scale. It's a bit more simple. Okay, so this is the log scale move of the 70s. You can see we have the bottom here at the top and then the low. And then what you could see is that after we made the low, we clearly went for the 100% measured move, which is right here. Right here was the 100% measured move. But typically, as you know, in every blow-off stage, we get massive. We can get extension above the measure, above the 100% measured move, and so on. And we actually went all the way up to 900. So we actually did a 60% overshoot of that 100% measured move. I'm not saying that we get this overshoot again, but just remember this ratio, right? The 100% measured move. If we go to the current move, what we have seen here, we can do the exact same thing. We can take the Fibonacci extension, going to the top here and to the bottom here. And what you will see, and also what I've said in a lot of my posts on Twitter, not lately, but for the past year, is that I think we will go to 7,500, which in this case is 7,900. But anyways, when this bull market is over, because this would be the amazing 100% measured move from this formation right here. And if, I'm not calling this, but if we were to get overperformance and we got halfway up more or less, right, let's call it right here. So if we were to get the same overshoot, the 60% overshoot, which is right here, I'm not saying that we are, but anyways, let's add it in. The 60% overshoot would give us $12,000 gold, and the 100% measured move is at around $8,000. So this move right here, and based on where we are with the dollar compared to inflation, as you saw previously with the breakdown versus inflation, I wouldn't call this madness to expect these kind of moves again, because it's all part of the history looking back. So yeah, this is what I'm seeing. So I think we will go for 8K gold, during this late this century, decade, my bad, and with some possible overperformance, given how bad it gets gets there. And as you know, it could get really bad because the dollar long term now is in a very bad shape. So yeah, that's how I see it. So yeah, please give me your comments below. What do you think, and where do you think gold will go in this decade? Will it uh, does your take on things look similar to mine? Do we have different views? Please let me know. But this is my take using the Fibonacci extensions. As mentioned, you can use different techniques as well, but this is one I think looks best in line with what we're looking at right now. So yeah, I hope you enjoyed the video. Please comment below, where do you think gold will go when we exit this decade? So in like 7 years time, where will gold be? And let's see how close we are to each other. And yeah, as always, like and subscribe to my channel, my YouTube channel at uselink INV. Please follow me here. I would love to get above 1,000. That's my first milestone. So yeah, let's see you in the comments below. Have a great day. Bye.